We are live here Friday evening on the Independent Investor Channel. Welcome to all the devote subscribers to the message and to the grander community here that frequent the message. I throw down on this product every Friday. This will be the last one for a couple of weeks here. So just bottom line up front, I'll be out of pocket for the next couple of weeks on a professional obligation. Do have some pretty awesome news to share with you guys right up front. The Independent Investor Channel will be seated for the next 4 years in New York City. Super stoked about that. This is where the channel started. The heart of the channel here is in one of the most powerful cities in the world, and I'm glad to carry on the message. It's super humbling to be able to operate here and to share the message out of really just a stone's throw away from the financial mecca of the universe, even though right now it seems to be operating as if it's a clown show every single day. And it'd be interesting. I would really be encouraged if there were people out there who saw things as down to earth as I see them. I sometimes go back and forth on whether or not I'm the one that screwed up, whether or not that I'm the one that's crazy, and how I actually look at financial markets and how everybody is so hypersensitive in the short term on looking at every inject that we get on the stock market and overanalyzing what it needs to mean. And a piece of data happens and boom, the market's got to go down 600-700 points in a day just to prove a point of the hypersensitivity surrounding the fact that just 3 or 4 years ago we had a completely different dialect, different synopsis, and a different stock market altogether. But I think it just speaks to the cycles of the stock market, and I think we're in the doldrums of hell right now, to be honest with you. I think sentiment couldn't be any worse. I think it's absolutely horrible. What I try to do is put a twist on what it could mean for the retail investors out there that will have most of their money in 401ks. I get so sick and tired of the question, what should investors do right now? What should investors do with their money right now? As if that's somehow a leading question that needs to be answered with some sort of accuracy. When I take a look at CNBC and I watch the commentators and I watch them carry out their interviews, and I know their intention is good. They're trying to seek at some level of truth and understanding that people are probably watching, trying to understand if it is prudent to make a move in the stock market or jar it around a little bit. And the best thing you can possibly do, and I've nary have heard an investor, because they wouldn't be allowed back on CNBC if they came on and said this, but for somebody to look into the camera and say, nothing. You honestly think that SVB going under? SVB was making speculative startup risks. And if you followed the startup market, the IPO market, if you followed that, there's nary an explanation as to the lead up to this debacle, and who these clowns were that allowed this balance sheet to get out of control. Because there's other banks and books of business that are looking at this, and they can't believe how leveraged they were with their deposits based on their obligated outflow pursuant to their book of business. Now everybody wants to suggest that somehow cryptocurrency is going to be the savior. I find that a little bit premature, in that cryptocurrency just went through crypto hell, crypto ice age, whatever you want to call it. And I find it very rich for people to be coming on. I had one guy come on and say that gold and crypto gold, Bitcoin, is where you need to be right now, and that you would fade every single update that you've ever had in the stock market, anything that's going to happen over the next coming months or need to be faded. Um, that is not what people need to hear. It's not what people need to hear. In other words, let me play devil's advocate for a second and suggest that if I was going to try to deploy that line of thinking, my dollar cost averaging schedule would cease to exist and I would stop funding markets. Now, mind you, the vast majority of people out there probably are taking the right approach and that they're naive to what's going on anyway. Okay. And I think that's probably just as dangerous as knowing too much or thinking what you know is actually correct. I think acting upon this idea that somehow the financial system is going to go under, I'm here to tell you that it won't. You can believe me or not. Okay. You can have your own thesis about whether or not you think Bank of America is going tits up next week, or JP Morgan is going to go ahead and lock its doors. That's not going to happen. Okay. And I fail to understand how Credit Suisse and SVB and Signature and these banks that are having problems right now because of the Fed has raised interest rates so far that there's starting to be some cracks and even breaks that appear in the stock market, and we're somehow surprised by that. Um, I don't even know if the Fed anymore is completely out of the woods. We'll see what happens next week with the Fed decision. Everybody's asking whether or not they're going to raise 25 basis points or 50 at that point. I don't really care. It would be an educated guess at this point to speculate on what direction that they're going to go. The sheer reality of the situation is this: the S&P was up for the week. Um, the Dow Jones Industrial Average is off 5,000 points from its all-time high. Will we ever see the all-time high again? Schools of thought in the acute would suggest that everybody out there that's being reactive to stock market volatility in the acute should just throw in the towel and give up this thing, only for the vicious cycle to hold true as it typically does, which would typically benefit the institutions who are being awfully silent right now on the sideline, um, probably picking their winners. Nobody's talking about healthcare on fire. Healthcare is on fire right now. I own the sector and I own a lot of specific stock in the sector. I'm whipping some ass. There are some certain sectors that I'm still up in. And to be up in anything right now is a glorious feeling because right now, seemingly, whatever it is that is being done right now is not working. And you want to know something? That's all right. That's all right. I've focused in on other things to work on. I wish I could engage in a little bit more of my activity of swing trading, but this market has just been so brutal that I've taken a couple of strategic swings in Norwegian cruise lines, which I think again is back to a buy. I've swung traded the triple Q's TQQQ about a half a dozen times, and I've made money. If you picked it up between 20 and 25, you could have defined for yourself a pretty acute trading range if you were, micro focused on the present now and just bleeding off a few dollars from the stock market, which is what I've done just for fun. Made money on it every single time. I missed my last entry. I knew it was a great entry at 20 the last time it dipped. That was just what, 3 4 days ago. But tech really showed some good strength. Amazon back above 100, Google looking good. These are all fantastic companies. Meta is the one right now that's involved in a massive shift in cost cutting and reevaluating their position on, I don't know, naming the entire company after the metaverse, and understanding that it fell on some pretty scrutinizing investor ears to suggest that dumping $10 billion, excuse me, into the metaverse over the next foreseeable future might not have been the most valued proposition going forward, and who's to know. But if I was going to be opportunistic on this market, I would look at big tech right here. I really would. Technology, for you guys that have tuned into me for the last 5 years, has always been my absolute favorite sector, and it always will be. It absolutely will be. I'm a big fan of industrials. I'm a big fan of healthcare. Energy has really rolled off, and I got to give a lot of credit. I see Matt Money in the crowd here. He was going against a very, very strong current of energy, and he was the only guy that I saw on social media saying this is not going to hold. Now, just 2 weeks ago, 3 weeks ago, before it started to crack, there were people talking about energy as being the Bitcoin that they're talking about now. In other words, they were talking about that being the bullish call for the remaining of this year and into next year. Matt was really the only one. And if he's got a little more updated of a thesis around that idea, I would actually, Matt's probably not busy. I'm going to invite him into the channel because I'm just feeling saucy like that. Yeah, I'm going to, just because I can. And well, hell, I'm the boss. And sometimes being the boss, actually, this is meant for Matt. Anybody can use this link actually and kick into the studio. If you guys want to click onto here, let's see if we can get 6-8 people in here and just throw a party tonight. This will be the last live stream I actually do, but that's actually a VIP for Matt Money. He's probably scrambling. He's like, man, I got to get on here and say hi to Ryan. If you don't feel like it, Matt, or if you're not proper, don't worry about it. I'm in pretty good spirits tonight, that's for sure. But yeah, really holding in on the portfolio. As far as new strategic moves right now in the stock market, I have started some really exciting new speculative positions. I'm now engaged in a couple of projects that are really fun and very cool projects. This week was devoted to stallion discoveries. I had Drew Zimmerman on the channel. They had their non-brokered private placement issued in the amount of about 4 million. So they're engaged in that survey work up in the Athabasca going after uranium, which uranium is creating its own bull market in and of itself. And I think if gold does surpass the 2000 mark, I think we're probably looking at a multi-year bull market. But who am I? I'm just a nobody on social media, but I'm going to bring on somebody who's definitely not a nobody. He is the who's who of social media. As a matter of fact, this guy is so down to earth and so pointed with his advice. You actually have to do something that escapes a lot of people, and that is listen. You got to listen, my friends, and you can't be afraid to deploy really, really good information with you get it. But we're going to have a special treat tonight. It's been a while since I've had Matt Money on, but with that, I am going to bring Matt Money on in like 1 second. But before we do that, we're going to take a small commercial break, and I'll be back with you in just a moment. You got to do, man? You got to do your jumping jacks. Is that what you got to do to get all warmed up, Matt?
I look like a poor person though. My green screen isn't working. I got boxes in the background from a TV that I bought. YouTube, so yeah, man. Sorry, I was just getting a little situated. But I appreciate your commercial quality, man. It's always really good. I appreciate you bringing me on the channel. It's always a pleasure.
I haven't talked to you for a while, man. What's been going on? I'd like you to update me on some of the progress. I know, the best I've been tracking is that you've been dabbling and rightfully so in the real estate game, and congrats. I tip my hat to you. you're one of those few cats, man. I do not follow 1,000 people. I do not follow 100 people. You're in my like unique core that I'm just
Yeah,
like, yeah, man. I want the very best for you, and I think it's happening. But
I appreciate it. I just
yeah,
want to check.
cool.
Can you hear me perfectly fine, or?
Yeah, I can hear you
Okay,
fine.
perfect.
Yeah.
Real estate's going good, man. I'm like I think I stumbled into something really good. I don't think everybody's situation would be that good,
Yeah.
but we just found the right guy who was like, you know what, I'm moving to Florida. I want to sell the portfolio, and it's looking pretty good. We're at about for
Good.
book to date, we're at about 40% occupied. It's a seasonal rental, so the fact that we have
Already? Oh,
full
that's
year
early.
2023 for
Oh,
40%.
I got you. Woo!
Yeah, for the whole
Already.
year, we're at 40% booked.
Oh.
So summer's like 85 to 95%. But anyway, I'm like literally talking to my other buddies. Like I partnered in it with my one good friend, and I was like, the fact that we haven't been doing this was like doing a disservice to ourselves. If we're able to figure out a way, now I'm not gonna I like talked about it. My one buddy was like, "Just sell your whole stock portfolio. Let's do it." And I'm like, "No, I can't do that." But I definitely would want to buy another one or two a year. But it's a good opportunity. If you can find the right place, right location, which I think that this one is, then yeah, it works out. But anyway, I don't want it to be all about the real estate. Congratulations on hanging out in New York for another 4 years, not moving the fam.
I'm 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 humbled, man. I'm about to give an address here in June that's gonna turn some heads. I will make that available through social media. That'll be a special treat. If you do follow me, man, you're gonna want to catch that address because I'm gonna touch some heartstrings for sure, man. You know, for a kid from the country, man, that used to skinny dip in the pond and kill bees with mud patties. I'm here in the big leagues, and I know in your industry, you're kind of in the big leagues as well. I used to work down there, Matt. That's what we have in common. I mean, it's the second or third largest petrochemical in the world. If not, if I'm am I mistaken on that, it's right there in the top three. I don't think it's number one, but Houston's no joke, and it's just an honor to be doing what we do. We're lucky to be doing what we're doing, and that's why I look at the stock market here in a box. And is it right to just fall all over ourselves, throwing up our hands and questioning the banking system and acknowledging the Bitcoin run like it's the crypto craze? And just 2 months ago, it went through its crypto winter. I mean, Bitcoin was up, if I'm not mistaken, middle of last year into last year. I mean, I can't remember exactly where it fell off, but 50, 60,000 per
Hmm.
coin, and it dropped all the way down to 15, 16,000. That's a massive decline,
Yeah.
massive. Especially when the fundamentals really didn't change. I didn't think that that was a systemic reason enough to affect Bitcoin, but obviously, as the most recognized and probably the one that is going to make it long standing, is going to suffer from it. But a little bit premature on this whole idea that the entire financial system is going to go to the wayside, and we're going to all be relying on Bitcoin. But I do have a question directly for you. I could just retire and exit stage left and let you run this thing because everybody wants your insights anyway. But what do you want to talk about TQQ, Matt, if you want?
Yeah, yeah, I never sold any of it. In fact, I add a little bit every once in a while, but it was always a position that was, and I insured, and I always talked about it to be something that was limited to the portfolio in terms of total percentage. And so I
Yeah.
think a lot of people are sitting there being like, "I told you so," and I'm like, "Well,
What?
I still have a pretty good sized portfolio. It didn't take me down, but yeah, I think I'm sitting on like a 50. I'll check. I feel like a 50%, I think, loss. Um, but I mean, I'm open with it. I don't hide anything from anybody, and
No,
yeah, I think I'll pull it up. But yeah,
I
still,
don't.
and
I think. I
I
don't think.
follow.
I don't. I don't think we could, because we watched technology run up over the last 10 years. There was nary a day that we tune into the market and see Amazon down or Google down, Nvidia down, and the entire sector has just gotten crushed. Um, and it's been the last year. It's been very, very tough with technology, and it started with the raise of interest rates, and in an interest rate environment, you know, it's going to initially roll off because the environment has definitely changed. But I think now off in some names 50, 60%, especially NVIDIA is really showing some strength.
Mm-hmm.
I think the most volatile in the name is Meta right now. That's the one that makes me probably the most nervous. And then the most bullish I'm on is Google and Amazon for sure. I mean, those are just elite. You know, if you were going to, base it on valuation, I think you could have justified not buying it, for the first part of the last decade. But the latter portion of the last decade, it's really rolled off. I think adding Amazon here is prudent over the long term for sure. What's your thoughts?
I agree. I was listening to a podcast last night, or rather a stream that they normally turn into a podcast, and they were very, I guess, aggressive against Google. And I think that
Against
I think,
Google?
yeah, I
That's
think
smart.
they're the number one search provider, and I think that they're reading too much of the headlines about the Chat GPTs of the world being
Yep.
searches going to zero, and I just don't foresee that happening. I mean, Google on its own, is number one in search, and I think that if anything, they'll have AI enhanced search,
Well said.
and I honestly don't think that the GPTs of the world, and I don't want to go down a rabbit hole, but I think that they anticipate that a lot of the kings always move in and out, and I get it. I see that Microsoft has been one that has been able to hold on since the 90s as being a behemoth. But I'm long. I think short term I'm over 300 shares a piece. I think I'm trying to get close to 400 in probably the next year or so. But I like both. Google, I'm way better in position of. I was buying Amazon because I was late to the party, so I'm down about 25% on Amazon. I'm only down. Oh, I'm up
Same
on
here.
Google actually. Um,
Nice.
so yeah, I wasn't lying. Yeah, I'm getting pretty
Good.
close to 400 on Google. Amazon, I'm like 35-ish shares away. So
Gotcha.
they're probably some of my bigger individual positions behind Shell.
Yeah.
Yeah.
So you're holding a pretty big position in Shell.
Yeah.
Is it their transitional business with Shell because you can speak way more in depth about it. What do you see in there with Shell? Is it the transformation to
The
renewables
thing that
or?
I like most about Shell is actually we might be able to announce something here. Not me personally, but they'll something I just worked on with them. Hopefully, in the next couple months, we'll be able to announce something. But
Gotcha.
they don't. They're not very whimsical. They're very calculated. They invest through the cycle,
Yeah.
and they know that oil's going to be around. And coupling that with
What?
prudent investments in future technologies,
Yeah, right on.
I think that they do a good job. They're like very steady about the pace, right? They're not like some of these other folks. I can't mention names, but
Yeah, sure.
some other folks that are very much like pendulum swingers, where the oil price goes down, they hold all investments. Then the oil price goes up, they hold all investments. Keep in mind that some of these things that we work on, and you know this more than anybody, Ryan, when you're getting boats made in Korea and you're getting
Yep.
facilities made in China, some of these things take 5 to 10 years before they actually start producing a barrel of oil. And
Yeah.
so that's at least the business I work in. Not all of our business is in that, but you have to think, like, just because oil price is $30 today doesn't mean in 5-10 years it's going to be $30. So
Awesome.
Shell's very prudent about just having a very long-term mindset, whereas some companies are very, hey, the oil price is good, let's drill it now, versus when the oil price is down, you cut back. I see the moves a little bit, but to have the extremes, not a fan of. Shell's done a very good job over the past 10 years. And so, to me, I thought that they were the most prudent investor. Coupling it with the long term transition, I think that they'll be one
They'll
of the
be there.
best. I mean, they made over $60 billion in cash flow from operations last year. Absurd. Absurd.
Behemoth. Behemoth. Hey, you want to take a crack at this, and then I'll take a crack at it. I want to be fair to all the community members, and I certainly don't discriminate, man. I know it's tough that you fall victim sometimes to the emotional piece to the puzzle. I just fall on the sheer statistics of the fact that um, why do most people suck? And it's like, okay, well, you need to evaluate, where's your household debt? Is it with the statistics? Right now, it's at 15,000 of unsecured household debt in this country. So it is a broad swath, and perhaps maybe irresponsible on my part, but it speaks to the fact that even a few $100 emergency expenditure is going to put most people in financial ruin, which would absolutely back me up on the idea that most people absolutely suck. And it's not because of those acute conditions, it's about people's lack of mental approach, and suggesting because I invest in an acute name that is not part of my total comprehensive portfolio would somehow minimize my observation that people buy into what's going on right now, as if I need to panic my way out of the market and I need to, somehow run for the hills, or I need to somehow sell and wait for a better day, or hey, what are investors supposed to do right now? And the prudent thing is just to wait through. My challenge to retail investors is, do people truly understand and truly resonate with the idea that that's exactly what they need to do? If they're going to do anything, they need to do more. But to suggest that I take a strategic stab, and I've been in the stock 3 years, in the eyes of a startup, that's nothing. And people want to attach in the acute investing in a stock, and if something doesn't happen in a week, okay, I'm okay with that. And then something doesn't happen in a month, and all right, I'm still kind of okay, but it feels kind of funny. 6 months go down the line, and I'm starting to kind of really just not really dig this shit too much, right? A year goes by, and God forbid, okay, now you start looking at it and you're like, okay, that moron 12 months ago that made this investment has completely changed. All right. Right. They're talking about Bitcoin going back to 50,000. And somehow my thesis that I had 12 months ago needs to somehow be discredited because people are telling me that it needs to be discredited. Right. Right.
Mhm.
I absolutely don't suck as an investor, but I just can't resonate with this idea of holding this any longer than 12 months. Time is immaterial when it comes to the stock market. Okay. And if you're evaluating companies, okay, based on the performance of a stock, then you're just doing it wrong. You're just doing it wrong. And you can disagree with me all day. You can make your decisions based on the fluctuations of stock over a week, month, 6 months, year, if that's what you want to do. But the fact of the matter is, I don't suck. I should, based on my income. Okay. My income is in line with the average income in this country. All right. Average income worldwide is less than $9,000 per year. 9,000 a year. Here in the States, we are lucky. All right. Average income is about 56,000 per year. All right. And we do a really, really good job of bastardizing that household income and giving away the farm, because we can't resonate with this idea of putting a little bit away for our financial future. With regard to the comment on Hyliion, I'm eligible to make those strategic stabs. All right. I have earned the right to do that. And for the masses out there, I would highly encourage you to get to that level, but most people are not there. Do you have a shot at it? Maybe help our audience?
Yeah, absolutely. I think the thing that with retail investors is a very broad term, right? But I think a lot of people
Yeah.
don't realize that it's personal finance. And as you kind of said, right, you and me, you and I can chat back and forth, and we're on the same playing field in terms of, hey, this is what I'm doing with my portfolio versus, let's just say, maybe somebody else that's sitting in the channel that might have $1,000 portfolio. And you and I can take those strategic sort of bites at these opportunities and hold on to them for 5 years, and it's really not going to hurt us because
No,
we're in our own race. We're saving 20-30% of our income, maybe more.
indeed.
And a lot of other people are expecting that these things are lottery tickets. They can invest $1,000 and they'll never have to work again in 2 years. But unfortunately, the hard truth is that anybody can invest at these days, and that makes it a little bit more harder. You have to think, if anybody can do it, it's going to be very difficult, right? You have to do the things that people can't do in order to really stand out and make that true jump to the next level, right? And so the playing field has been evened by the fact that everyone has access to, at least in the United States, and has the opportunity to invest in the stock market. So what's that mean? It means you have to either be really, really good, really, really smart, or lucky to get to where you're at. You can't invest $1,000 into some stock that you heard at the water cooler, and expect it to be a moonshot. I mean, a prime example of this, people look at this and they think it's like legit lottery tickets. We got our bonuses on Tuesday or Wednesday. Yeah. So I had a buddy come up to me. He's just like, oh, he's like, I'm throwing around $500 on this, 1,000 on this. Big banks are good because obviously all of them are depressed right now. So he's like, oh, okay, like this is what I'm doing. I was eating lunch, just sitting with them, and I was like, he's like, what are your thoughts? And I was like, well, my two big ones, not going to toot the horn, but I always do, Palantir and Rocket Lab. And I was telling them Rocket Lab, they just had a launch yesterday. I was getting excited. I think this was yesterday when I was having lunch with them.
You bought some shares.
And I wasn't like trying to convince them to buy the stock. I was just talking about the company. And I'm like, they're going to launch one today. They're going to launch one in a couple days. They're the second most launched small rocket company in the world behind SpaceX. They're doing really well. And next thing you know, he messages me in our internal messenger, and he's like, "I bought $500 worth," and I'm like, "I didn't tell you to buy it, man." But people look at it like, "Oh, I heard about it by the water cooler. Matt likes to invest. Maybe I should just." And so to come back around, and I told him straight up, I was like, "Hey, man, could go to zero. Might turn $500 into 25,000." But
sure.
I was like, as long as you recognize the risk that you're playing in, the objective of what you're doing, the time horizon, and how often and frequently you're investing, you can really start to gauge where you're at. And I think a lot of people, and this is prime, and I'll hand it back to you, a lot of people lack perspective. And what I mean by that is you'll hear somebody, there's a good guy that I like to talk to. He's a chartist, he charts, and he's very much into the ebbs and flows of where the SPY is going to go. And he's like, Matt, I think it's going to go down, man. I think it's going to be tough. And I'm sitting over here being like, to me, SPY's going to go up. But I'm looking on a 5 to 10 year time horizon. He's looking at a 5 to 10 week time horizon. So we're both right. The statements that come out of our mouth are both right from our perspectives. And I think a lot of people don't really sit back there and they hear something come out of somebody's mouth. Like they'll listen to Jim Cramer or somebody else and they'll be like, well, Jim said this was a buy. It might have been a buy for that week or the next 2 weeks. You have to think Jim's a trader. Versus me, I'm more of a long-term investor. So I don't mind if something like a Hyliion, I'm not invested, but if a Hyliion, or in my case, a Palantir or a Rocket Lab is down 30%, because I recognize that I'm investing for a 10-year time horizon, not for the next 6 months. Versus somebody that's invested for the next 6 months need to recognize that this isn't something, or what they might be potentially looking at to moon over the next 2 months isn't necessarily the thing that they really thought it was. And they need to do more due diligence and put more effort into it. But I think that that's what most retail investors are these days.
That was golden, man. That was golden. Thank you for that insight, Matt. I really appreciate it. How do you think, and I'll turn it back to you as well, because I think you're onto a thread. I just think market sentiment right now, when I watch the reaction of certain stocks, even the market as a whole, is really herky-jerky. I mean, where the futures go is pretty much the direction of where the market goes, and the sentiment starts off, right away. It's been pretty tough over the last 3 years. I have forced myself to acknowledge a shift in market sentiment to the downside. I've just forced myself to do that. Now, what does that mean? Does it mean I shit my pants? Does it mean that I panic? Does it mean that I sell everything? No, it means the opposite. If I'm wrong, I'll be wrong. But I feel like what I'm seeing from a personal perspective is that sentiment is poor. Now, if your friend is right and the market does go down in the short term, what does that mean to me? It means the opposite of what I just suggested, because I don't enjoy shitting myself, nor do I enjoy following this idea that I need to somehow panic my way off. No, 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 my friends. I will be looking at strategically upping my contributions monthly. I'll be looking to strategically buy the markets. Now anymore, you could place a rule around your strategic buying to buy the market at 500 or more Dow points to the negative, right? You could take it right up to the market closes at 358, 359, and go ahead and throw those strategic dollars in there. Could it be down the next day? Certainly. But over time, I'd like to buy the market 5, 6, 7, 800 down on any given day. I'm buying the market there. Okay. This is just the nature of my profession to people, is to be independent with your application. If you're going with the flow, you're probably doing it wrong. So I want your insight, and I'm gonna ask you to kind of dig deep in that. I don't think there's a lot of positive stories going on right now. There's positive stories going on with companies, but as far as the stock and how it reflects to the general sentiment in the stock market, yeah, I don't think so. And it's specifically in the small cap and micro cap space that I'm seeing, where these companies, there was a little more animal spirits, prior to the couple years ago, before kind of around the time the new administration shifted, and a lot happened too. I really think this post COVID era has probably been misjudged. I think the labor market, as strong as it is right now, is just a product of people emerging and wanting to go back to work. And that sheer demand over the market is very real. And then you've got a Fed chair, right, that's trying to break that dynamic. So speak about market sentiment. I've had this up here a while, but I do want to just throw a couple names out. Yeah, BAC is good. Charles Schwab is just about as close to a blue chip as you can possibly get. That would have been your strategic buying opportunity. I don't know what's the other bank that really took a swing during this SVB debacle. Oh,
I know PacWest did.
Yeah, there was quite a few regionals. I mean, people were understanding that regionals accept people's direct deposits, and those are pretty solid. Whereas SVP was doing, you know, uh, you know, financing for the venture capital stuff coming out of Silicon Valley, and it's like, come on, guys, just use your head, right? It doesn't mean that JP Morgan's going tits up. That's not happening. Okay, this is not a systemic issue. All right, the stress test from 2009 that these banks are subjected to is very, very real. And a lot of the bank CEOs, if you're looking at what they're suggesting that their over leveraged accounts was irresponsible. And that's a pretty big statement to make to another major bank. But I'll get your insights on the market sentiment right now, Matt.
Yeah, I think if you asked me this, like you said, kind of 9 months to 12 months ago, I think you and I
Okay.
had a conversation. I think I was down. I think the term that I used was a house.
Yeah,
Um,
yeah, 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 yeah.
and you were like, you know what, man? Like, I think I was just going through it that day. I don't know if I don't have a dog, but if I did, somebody would have ran over it that day. It just, it was, I don't know what it was, but you called me
Yeah,
at the absolute wrong time. And I was just like,
yeah,
it's just
yeah,
not going well. Is it, am I
yeah.
teetering on the edge? And I would say most people probably would have sold their entire portfolio that day.
Totally agree.
And
Absolutely
I
agree.
think that you and I was just like, I'm gonna make it through, but I was like, it's just not one of those good days. And you were like, Matt, you're strong. I don't like seeing you like this, but I think you'll do
Yep.
fine. And so you gave me that good encouragement. And I think what I've continued over the last 9 to 12 months is, and I feel like it's not really gotten any worse since then. I feel like we've had some ups, we've had some downs, but I feel like the
Yeah,
overall sentiment, whereas I think it's now in the headlines for everybody,
yeah.
my sentiment has been like, I feel like we're starting to get to the beginning of the end. And I saw this on CNBC and I agree
Totally
with it.
agree.
Um, I think that we're starting to see some things break. I think the Fed is starting to acknowledge it. I think that
Yep.
we're starting to get to a point where we'll know where the next pivot is within the next 3 to 4 months. And so to me, I think that the sentiment is an all-time low, but I think in terms of where we're at, in terms of actual equities going forward, we're truly going to be at some place where we can truly start to add more capital and feel confident. and adding capital to the portfolio. I've been adding, regardless. That's what I do. I add at least $3,500. I actually add, as much as I can. I add, and if I'm not spending it on, God knows what, I'm adding it to the market. But I hope that others take this time and recognize that it's not about, unless you're getting close to retirement, you have to take it as if you're in a monarch, right? Times are going to come and go. Bad times are going to come and go. But just like I said with Shell, you have to invest through the cycle, and you have to recognize when it's appropriate to take your chips off the table. If you got 10 years, 20 years left in your horizon, it's not the time to take the chips off the table. And I think, exactly what you said earlier, if you're looking at it 10 years down the road, the SPY is going to be much more expensive than it is today in terms of a total dollar amount, or the S&P or the Russell 2000. It's inevitable. Yes, it's inevitable. So
There
to
we go.
me, I just think I think I agree with you with the sentiment piece, and I think that we're at the beginning of the end, and I truly think that within a year's time, by next early 2024, I think people will regret if they don't start tipping their tills to being back into the market at this point.
Do you think that that is in the face of a potential soft recession here in the back half of 2023? So that's in light of us probably passing through. If not, we've already been in it,
I
which is
I mean, my thought is, I mean, I'm glad you brought this up. I feel like I've been in a recession for the last 9 months.
fucking right, man.
So,
Yeah, dude, this is
like, I
why.
don't know. Like, I used to feel like, to me it was, and I felt the same way a little bit for about a month during the pandemic in 2020, and then it got back into. So it was kind of just like, you when you feel like you have to be disciplined and you have to stay the course. To me, that means we're in a recession.
Yeah,
Right? When I start having to worry about how much I'm paying for gas or how much I'm paying for other things because I'm looking for every dollar because I'm scared, to me that means we're in a recession. I'm a very high income employee.
yeah,
And so when I have to start worrying about it and when I hear others worrying about it at my job, to me that means we're in a recession. And I feel like that's kind of been going on for, I mean, granted, I work in a cyclical industry, so there's been
yeah.
other sentiment. But when people look at it from a macro perspective and not from an oil price perspective, I recognize that. So I think that we've already been in a recession. I think I agree a lot with what you've said. I think a lot of people have realized that their Shopify stores aren't doing as well as they thought, or they're, and that's okay. I mean, that
Yeah.
it might have worked really well, but I think a lot of things have transitioned into, everyone thought they'd be able to work from home. That's not the case.
Understood.
Um, and so I think that you have this economy that shifted 180 degrees during the pandemic and is now shifting, maybe 100 degrees, 120 degrees back
Yeah.
to where we were. And we're still going to have a new direction, but it's going to be completely different from where we were in 2019. Some things will be accelerated, some things will be no longer in the consumer trends that we initially thought. Some
Yeah.
things will kind of emerge, but you sell these markets, exactly what you said, like the Zooms of the world immediately go up, 1,000%, and all these other small companies that everyone's like, this is going to be the future. I remember hearing some prolific YouTubers being like, these are the companies that are going to take us into the 22nd century. And I'm just sitting
Mhm.
there. I was like, maybe they're right, but
Yeah.
at the same time, things kind of came back to normal. People are going into the office as expected. And, anyway, so I hope that answered your question. I hope I didn't dance
Big
around it.
time. No, that those insights are golden. You did say one thing that caught my attention. I know you're a high income earner, Matt, but I think you need to qualify that for the audience and suggest that you invest more than the average bear. And I think you should continue to share that. There's not a lot of people out there that can boast over 20% savings. And I think you're more at around the 30 or even 40, but that's awful close to half, Matt. That's pretty incredible. And perhaps maybe you can share do you live on farver beans and give up everything? You don't ever go on vacation, or you don't ever go out to eat, or you
I
never go to the if to accomplish that, right? I mean, you're really sacrificing, right? I save a lot too, and I don't feel like I'm giving up anything. In other words, if I had to give up buying more stock or investing more in the market, it's the to do what that I find interesting in people, how they justify. And remember, most people don't save. We know that successful people save and invest. There's books written on this. Okay. You can knock your socks off in getting to a place where you just can take my words and you can just grab it for yourself and resonate with this idea that successful people save and invest. It's just that simple. How do you make it happen?
Well, if you ask me, like, I would say 6, 7 years ago, before I did the YouTube channel, my buddy was like, "Dude, you gotta live life. Like, what are you doing?" Like, I was trying to, I was just like, "I need to save." Like, I was like, I need to save." And this is before I really even hit like $100,000. But I was just like, I need to invest this, and and he was just like, "Dude, like, what are you doing? Like, live your life. Like, you need to have fun." And so I'll say these days, I don't ball out of control, but the thing that I take most to heart is if your attention goes wherever you want it to go, except your money, that's
Ah,
where your money's going to go. Right. So money
well
goes where
said.
attention's going to go.
Well
So
said.
if you love, let's just say you have a few key hobbies, right? It could be golf. It could be, going fishing. It could be, but the problem goes, and spend money on that. Have fun, right? Make sure that, you allocate some funds to that every month because that makes you happy. But if you, let's just say, went skateboarding one time and you really liked it, doesn't mean you have to start buying like 80 skateboards, right? And same thing with, anytime you want to do something doesn't mean you have to spend 20 grand on it. I see a lot of people with a lot of stuff in their garage that they tried one time and they decided to buy it just because. Um, you can't just be buying stuff just because, right? You have to be, to me, and maybe this will make sense, maybe it won't. I'm more of a person, like, cost benefit analysis is a huge thing for me. You
Yeah,
have to do the same thing with your happiness, right? If you want to put eight
well
hundred
said.
dollars into something, make it sure it's something that you love, right? Luckily for me, investing is what I love, so I put a lot of money into it. But
Yeah,
I like fine cigars. I like
exactly.
fine
Yeah.
whiskey. And
Yep.
so when
Yep.
it comes to buying an $80, $100 bottle of whiskey, I'm not going to be like, oh, nope,
Yep.
can't do it. Like, let's be honest. I think I can be pretty blunt here. If I spent 80 to $100 in a month worth my income, it's really like I probably it's a rounding error, right? So it's really not that big of a deal. But
It's not.
if I did it every single night, 80 to $100, right? That's when it becomes a problem. And I think that there's a different, not because it's alcohol, but just in general. If I did anything with 80 to $100, it'd be a
No, for
problem.
sure.
So I think a lot of people just need to recognize it's like, what are the things that truly make me happy? Focus on that. If you love taking trips, you love traveling, make sure once or twice a year you have a decent travel. Obviously, don't go to the Maldives. That's going to cost you 20 grand. But make sure you get to take a weekend away. You don't have to go to the Caribbean. You don't have to go to Jamaica. You can go a state over. Smoky Mountains, 13.5 million people went to last year. And
Yep.
it's a beautiful place. I think,
It
didn't
is.
you go?
Oh yeah.
Yeah,
It's awesome.
it's a great place. I haven't
Yeah,
gone. I
it's
think I might go
amazing.
this year. It's only like a
It's
10-hour
amazing.
drive from me.
You are
So
you are you are catching me at kind of a guilty time. We just booked tickets this week to head to Europe this summer. We're super super excited,
yeah, you
man.
said, I wanted to poke your brain. You said you're going to Croatia again, right?
Going to Croatia. We're going to
Dude.
check out Italy, Lake Lagarda, and of course Czech Republic as well, where we've got roots in the family and whatnot. But man, I'm like so overdue. You ever press at work to where you're on fumes, but you know you have to press? And I've been pressing for a while, and it's very very satisfying for me to press, see results, have those presses really pay off. It's something that I'm also addicted to. I'm addicted to a few things in life. I really am. And some of them I won't talk about on social media. Good things, right? Like my spouse and but exercise, right? It's something that at my age at 45, it's something that I didn't have when I was your age, and now I do, and I'm at a point now where, I've evolved in that. It's like the investing game, right? You're a different investor now. I'm a different applicator with what I do for my personal health and well-being, and I'm addicted to my job. That's for sure. And those things are cool, man. Get addicted to those things that don't cost you a whole hell of a lot, and hopefully you can find a few of those things that you can kind of gravitate to. You can take this question, Matt. There's two really good questions here. The first one's on options for sure. I don't know if you've been on or off the options game. I'll let you take that, and then certainly we can talk about the Visa, Mastercard, PayPal shift to financials as well. There's a lot of talk about the financial valuations being so low, and Visa has really held their own, and they've been in technology this whole time. Is that right, Matt? They've been
Visa.
in tech, Visa, Mastercard. Is that right?
Yeah.
Yeah. Now they're moving more appropriately. I don't know why they weren't ever there, but aside from comparing a Visa to a traditional financial institution is going to be a real disconnect in valuations there.
I think I'll answer that one, Bria. I think the reason why Visa and Mastercard is they don't really hold any money on the books.
Yeah.
Right?
Yeah.
They just take the
Yeah.
2.5% and they call it a
And
day.
they're good. And they're
Yeah,
good.
and they're great.
Right.
So
Just a
it's
juggernaut.
not like the banks that we're talking about, right? With assets and liabilities, where it's like, oh, we have so
100%.
many $100 billion worth of money in deposits. Now we have to invest
Yeah.
$100 billion to try to make some sort of leverage. Visa, Mastercard don't do that. They just take their 2.5%. They call it a day. But anyway, I'll let you answer that after this quick question. So I mostly focus on covered calls. And I'm more of a person that has kind of recognized I played with a lot of them. I've gotten burned. I've lost, probably $50,000-$60,000 in the GameStop problem that happened in 2021 by playing naked calls and stuff like that. I figured kind of out my niche with options. I prefer the covered calls of the world where you're able to own stock and write something that's a couple weeks out or a week out, sometimes 45 days out, and only write 5 delta, so it's very far out of the money, and you're able to get that. And if the price comes down, you're able to buy it back. But to me, I most of the time let it expire worthless. I do a lot on SPY as well because I have a couple hundred shares of SPY. I hope to get that up to 500 maybe this year.
That's what you have said. Yeah, I've heard you say that a few times.
Yeah, and so a lot of people are like, "Oh, why are you doing that? SPY has a higher expense ratio." Write a couple covered calls with the liquidity.
I've been the one to say that, but it's the expense ratio when you're trading options around the S&P 500. SPY is your bull.
Yeah, so SPY has been pretty good. Liquidity on it's pretty good, and so that one, because it has been in some sort of wild time, I try to avoid around the big things. Like I have one expiring on Tuesday, not Wednesday, because obviously the announcement with the FOMC is going to come out Wednesday. So you have to be a little bit more strategic around earnings reports and stuff like that. But I've mostly hovered around cover calls prior to the pandemic. Not prior to the pandemic, after the pandemic, prior to 2022, I sold a lot of puts, and that was like taking candy from a baby because the market always was getting injected with capital, so the market was going always up and to the right. And so that kind of gravy train kind of ended when the Fed kind of put the Fed put on, and it's kind of been very volatile ever since. But you could still do some pretty good leverage if you have some cash, especially now. A lot of people are trying to hoard cash as much as possible due to this kind of liquidity crunch. But it's always up to whoever the eye of the beholder is.
I think that was a good exercise, and just for people that don't understand, right? I mean, one contract is 100 shares, so for a lot of people to dabble in that, Matt's talking about the ability to write on a few contracts at a time, right? You're probably writing 3, 4, 5, right?
SPY's 3, Google's 3, Amazon's 3.
That's some big stuff there. So just keep that in mind. It's a little more in the advanced category, just because the amount of capital and the amount of shares that you need to hold, especially for those covered calls. So just kind of keep that in mind. But yeah, as far as the financial piece, I own Visa, I own Mastercard. I know Dave is in the group. Good evening to you, my friend. I own all these as well. I own Bank of America, Citigroup, Charles Schwab. That's a fairly new position as of 2022. I've owned it for quite a while, and then Bank of Nova Scotia as well. Picked up TD as well, Bank of Nova Scotia, as well as a couple of other Canadian banks as well. Can't remember the Toronto Dominion. Really good dividend payers, and they were smoking there for a while. They've obviously sold off with the debacle, but I would just own Visa on its own merits. Visa is one of my favorite stocks of all time, just for the reasons that you've talked about, Matt. I think it's one of those blue chip cornerstones that you can put in the portfolio and just own for the rest of your life and be happy that you did. I think they make more money than the entire country of Australia. So pretty bold statement. So
they do pretty good.
They do.
Yeah.
Yep. There's always a light. I tell you, it's been pretty rough, and even to do YouTube, it's more enjoyable. I get it, to come on and hoot and holler, but I know in my heart of hearts that the value that's being produced right now, when it's harder to do so, is in line with everything that we should be fighting. Our instincts to throw in the towel, our instincts to, kind of back off of the market when we should be putting pressure on it. Using these opportunities because, if nothing else, from 2010 to 2020, people would come to me and they'd be like, Jesus, I don't see an opportunity. I'm waiting for the market to pull back. Right. Well, now we're here. And the question becomes, are we going to be 2 years removed of this time, 1 year, 5 years, and reflect back on this and say, God, man, I was sitting here watching a live stream with Matt and Ryan, and they were talking about telling the future. Well, no, I don't believe in that shit, right? All I'm saying is you will be in a place in your future reflecting back on this. And we can say in the acute that financial markets are pretty rough right now. All right, we're nowhere near all-time highs. The S&P's off of the all-time high. I don't know what it is in the S&P. I don't think it ever rolled over 46, 48, I would imagine. But 36 and change on the Dow. We're well removed of those. And if you're going to strategically start a position, I think now is that time. So, it'll take time for us to be right. And it's not the time when everything is chugging right along to pat yourself on the back. It's times like this when nobody has the courage to step forward and say, hey, maybe we're not seeing the right stuff here. And that, to your point, that's usually the time when we need to start to press a little bit more. What's your thoughts on that?
And I think to add on to that, I think what you need to recognize is certain sectors are going to perform well when others are down, right? So just like technology and a lot of those, I guess, companies that have low revenue have been smacked down some 70 to 90%, let's say.
Yep.
Consumer staples have done relatively well.
100%.
When the market kind of pulls out of this, are those companies going to do well, or so think about it. If you care about your portfolio and the performance of it more so than being right, then I would say, be very cautious, because during certain times of when markets go in and out of recession, certain industries do better than others. And if you don't care and you just want to sit back and make sure that your money's in the right place, it could be a good opportunity to invest in an index fund and just lay back and let it go. Because I think a lot of people, like Ryan said earlier in the stream, a lot of people were moving their money into energy because it was the best performing sector in 2022. And here they are, getting, if they're investing now, a lot of people are still investing in energy thinking that things are going to turn the table. And to be very frank, it's kind of uncertain. But I mean, I know a lot of people that were still buying energy up until 2 months ago. And I said, oil prices kind of halved compared to where it was in February of last year. Is it something that you really want to wait to find out what 2023 brings for earnings? But, that's not to say oil only. I mean, I think that can go across many sectors, right? Ryan brought up semiconductors and stuff like that. When the markets kind of go back to expansion, I'm assuming semiconductors are going to come back into favor.
Agreed.
So if that's something that you're like, okay, I want to keep an eye out, keep it, look as a hawk, and be up to date with that sort of stuff, by all means. But there's a real simple strategy, and you could just invest in the S&P
or do both, like I do.
Or both.
Or do both. Cool stuff, man. Well, gosh, I'm gonna crank it down, Matt. I try to keep it to 60 minutes anyway. I am flying out on Sunday, so I'll be out of pocket for the next couple of weeks. But thank you, man. It was awesome to catch up with you. And I tell you what, I'm a fan of Matt Money. And you're unaware of Matt's channel, man, kick over, subscribe to his channel. But I actually enjoy following Matt on Twitter. It's a little bit more real time. And Matt's pretty active over there. And any insights you have to offer to the grander social media audience, my friend, is a treat. And always welcome here on the Independent Investor Channel. No doubt
thank
about
you,
it.
brother.
That's the way it'll stay. Yep. Let's hope for better days in the market. Thanks for your time, Matt. Really appreciate you, brother.
It's a marathon, not a sprint, my friend.
Amen. Amen. Well said. Be well, Matt.
Cheers, brother.
Hi, brother. Yeah, very cool stuff, man. A big thanks to Matt. I know I had invited him a couple of months ago and the schedules didn't jive. And I didn't invite him tonight except for on the fly. And that's pretty cool. He said something during the stream. It resonates with me. He said, I really love investing. I think it means a lot to everybody. Coined personal finance. And, what does it mean to you? What type of time have you taken to define your own personal approach? I see a lot of people that take a lot of time to judge what other people are doing. I was called out on it tonight. Why do retail investors royally suck? As if I'm judging people from with false pretenses. And I don't mean to make people feel bad, but what people need to understand is that I might actually be including myself in that category, in that I have been subject to making haste decisions in the market. That means I suck. Okay. If I'm subjecting myself to poor decisions in the stock market, no, I don't consider highly on a poor decision as it reflects to me. If I didn't invest at all, my job will pay me a pension worth $1 million. I'm a millionaire now. Okay. If I arbitrarily end up doubling my money over the next 7 years, which is absolutely a possibility, Hyliion could go to zero and I could still meet that mark. Why? The pedigree and the great separator between me and others out there isn't the fact that I have all the answers and I can make the assessment that people royally suck at investing and people need to listen to that and buy into it. No. That's not what it means. It just means that I have spent the ample time to understand how I look to carve out my investing opportunity. That's all. I spend more time than the average bear doing it. And that has lent itself to the success that I've been able to garner in the financial realm. Okay. So it absolutely qualifies me to look at those deficiencies across the spectrum, identify where Matt's going to spend $100 of bourbon. There's people out there that don't need to be doing that, because investing should be more of a necessity. It should be that top priority, and the concessions and the sacrifices that you make should be greater until you get to that level, right? To where you can start to say, you know what? I made those sacrifices over my life. I've made those concessions. I'm at a place now where I focus more on me, as a matter of fact, more on me than anybody else. Okay. And I can parlay some of my surplus capital to give myself a little pat on the back. And I don't think there's anything wrong with that. I don't mean to offend. My intention is absolutely not to offend, rather to strike up some constructive thought in your application. So appreciate you guys tuning in. It was a good live stream, very robust. Thanks again to Matt Money. Really appreciate you guys. We will be off next week and the week after. The next 2 weeks I will be out of pocket and on an obligation, but we will strike it up 3 weeks from today. Maybe we come back and we talk about a little bit better of a market here, but be well. Have a great weekend. Happy St. Patty's Day to all, and we will catch you guys in 3 weeks.